Hey, it's Jason Wig. I'm a tax problem resolution attorney with Wig & Gear. We protect our clients from the IRS so they can stop worrying and focus on what's important to them. So the most frequent question I am asked by people I talk to, prospective clients, referral sources, whatever, is how can someone legally reduce their tax debt with the IRS? So, I think it's human nature to want a discount on something if you can get it. I also think many of my clients see the large, outrageous amount of penalties and interest that's charged, and they try to find a way to get it reduced if they can. So today I'm going to go over the 4 main ways that you can legally reduce a tax debt with the IRS. So the first option is the IRS has generally 10 years to collect the tax debt from someone. So the person can just defer and delay and try to wait out that 10-year period, because once they get to the end of it, the debt is written off. So there's 2 main ways that we do that. We delay, and then when we can no longer delay, for example, if the government was going to take action against my client, take their property, do something horrible to them, we can no longer delay. We put them into what's called hardship or uncollectible status. So that's a status the IRS will put you in if they determine that you do not have the money, if you can't afford to pay them. And then the other thing we do is we put them into an installment agreement. So the IRS has a program where they will agree to let you pay less than you owe over the 10-year period. For example, if I'm able to negotiate a $100 a month installment agreement and my client owes $100,000, there's no possible way they will pay off that $100,000 liability over the 10-year period. In fact, if they were to pay $100 a month for 10 years, that's a pretty significant discount on $100,000. The second option is to submit and have the IRS accept what's called an offer and compromise. An offer and compromise is the formal process that the IRS has to settle a tax debt. So, most people have seen these ads on TV or on the radio that talk about settling tax debts for pennies on the dollar. They're talking about an offer and compromise. I would say those ads make it seem a little easier than it really is. We have clients all the time who settle for pennies on the dollar, but there is no percentage or amount that the IRS generally accepts. Every offer and compromise is based upon that person's specific situation. They're looking at the taxpayer's assets and liabilities and their monthly income. So generally speaking, the more valuable assets one has and the higher monthly income that person has, the higher the settlement offer would be. The IRS just uses this formula, and the formula dictates the settlement amount effectively. The next option, the third option, is to request that the IRS abate the penalties that were charged. So there are 2 main penalties that are charged against taxpayers. So the first is a late payment penalty. So if you have an IRS tax debt and it's not paid in full by the filing deadline, the Internal Revenue Service charges a late payment penalty. It's a 0.5 percentage point per month, and then it's charged until it reaches 25% of the unpaid tax debt. The other large penalty that's charged is a late filing penalty. So if a person files their tax return late, it's 5% per month, and it maxes out at 25% too. So if you have both penalties, it's a pretty much 50% of the tax debt, just under 50%. So it's a significant amount of money we're talking here. So if you're able to have the IRS reduce those penalties or abate them, it could be a significant savings. So the first step in that process is, if it's the first time the person has ever had a penalty, first time the taxpayer has ever had a tax issue or a penalty, the IRS has a program called the First Time Penalty Abatement. Basically, it's like a one-time get-out-of-jail-free card that can be used. If the person doesn't qualify for that, or let's say they owe for multiple years, you can submit a penalty abatement request to the IRS, which is like a written narrative explaining why the taxes weren't paid on time or the tax return wasn't filed timely. And if the IRS determines that the excuses are acceptable, that you have a reasonable cause, the penalties could be abated. And then the final option is to file for bankruptcy. Income taxes can be discharged or written off if you file for bankruptcy. Other tax types, maybe not. It just depends. But the key to understand here is that unlike other debts, for an income tax debt to be eligible for a discharge in bankruptcy, you have to wait out certain time frames to file. So the two main time frames are you have to wait 3 years from the tax return due date or 2 years from when the tax return was filed. So, and you can only file bankruptcy, you can't constantly file bankruptcy. There's a time frame that you have to wait once you filed. So it's really important for the person to understand when those time frames are so they can maximize their bankruptcy filing. So those are the 4 ways that you can generally legally settle an IRS tax debt. Once again, Jason Wiggum with Wiggum & Gear. We help people fight the IRS. If you have any questions or need any more information, our number is 404-233-9800.